Hello, everybody, and welcome to the PPP Loan Forgiveness webinar put on by Greenough Consulting, Pacific Western Bank, and VPTAX. We are excited to be here. You know, this has been an amazing lift by banks, by the SBA, and by the borrowers. When you think about how much money almost $750 billion was infused into the economy over the course of just about 4 weeks. It's amazing. I mean, I know that here at Pacific Western Bank, the entire team really pulled in to get all of our borrowers into the program. And, you know, things were crazy back then, as sure we all remember. You know, we didn't know what was going on and what we're going to get. The money was running out. The money was coming back in. Were we going to get our number? I mean, it was crazy. And it's just amazing how everybody pulled together and worked together to get that money into people's hands. But now we come to the next step, and that is you've got your PPP loan. So what's next? And that's what today's webinar is going to be focused on. And, you know, you guys have been sending in a lot of information with the RSVPs, and there's been a bunch of concerns that we're going to cover today. Things like the process, you know, and timing. While we're not going to go into specific bank processes, we are going to talk about the PPP loan forgiveness process. A lot of you are wondered about the lack of clarity and how things are changing. We're going to be looking at that today and looking to create more clarity where we do have clarity. A lot of you are wondering about how do I calculate the forgivable amount? We'll cover that today. What supporting documentation do we need? And the accounting details are things that we'll cover today as well. So real quickly, my name is Mark diTargiani. I'm a Senior Vice President of Startup Services and Venture Relations at Pacific Western Bank. And Pacific Western Bank is a bank with three basic business units. We have a community bank that does a lot of SBA lending out of our branches across Southern California and Central California. We bank a lot of Main Street businesses, if you will, there. We have a specialty lending group that does asset-based loans and AR facilities, inventory facilities, and those sorts of things. And then I work with the venture banking division, and we focus on venture-backed startups as well as the investors that invest in those. So that's quick about me and the bank. Today with us, we have two fantastic guys who are going to give us a whole lot of information on the PPP loan process, and they come from a great deal of experience. Frank Mastronuzzi is the VP of Biz Dev and a consulting CFO at Greenough Consulting Group. He's got a background in finance with companies like Deloitte and Motorola. He's been in the biz dev side of things as well as being biz dev at Match.com. Frank, that's something we're going to have to talk about one of these days. He's been an interim CFO at startups like Prezi, and he's also a mentor at 500 startups. So Frank comes to us with a great background in both startups and finance. Our other panelist today is Stephen Day, who's a principal at VPTAX, and he acts as a fractional VP of tax for a variety of different startups. He also happens to be a co-founder as well, as he has a company called Tax Prodigy. So he has an interesting perspective on this. And he comes from a big four background of accounting, being at firms like Arthur Andersen, Deloitte, and Ernst & Young. So we'll take a quick look at what we're going to cover today on the agenda. If we can move forward, Jeff. We're going to look at updates to the PPP loans and the EIDL loans, give you some clarity there. What is the forgiveness application look like, and how do we go through and get tips? Payroll requirements for the loan forgiveness, accounting for the PPP loans and the EIDL loans. We're going to talk about some tax preparation tactics, and then we'll leave some time at the end for questions and answers, as I'm sure there's a lot of those. We've already received some, and if you want to enter some questions, I can see they're already coming in. There is a question box that you can add a question, and we'll try to get to as many of those as well. We will be recording this and sharing this, so if you're quickly taking notes and you miss something, you can come back to it. And then when we do send a follow-up email there will be speaker contact info in that email as well. So without further ado, let's get into the meat of our presentation. And Frank, why don't you take it away?
Thanks, Mark. Hi, everyone. I'm going to start off by just covering the updates to the PPP loan and EIDL loans that just was passed recently. The point of this is just to summarize the changes that were put into effect. We're using the baseline assumption that everyone already has applied for the loans and started looking at forgiveness. So the actual loan application that exists on the SBA site is outdated given the new changes that have been implemented, but we're going to try to summarize them for everyone so that you're aware of kind of what to look for and what to avoid in the process. And so we'll cover that in the second section, but for now I just want to cover the updates to the PPP loan. So Jeff, do you mind moving to the next slide? So the Flexibility Act was just passed and put into law by the administration, and all in all, you know, most people are saying that the Flexibility Act was a win for small businesses. A lot of folks were giving feedback to Congress about the PPP process, and so they knew they had to make some changes. The new act eases many of the burdens and requirements that were placed on the small businesses. In essence, what they're trying to do is, okay, a lot of the things that people were finding difficult to manage, they addressed. So all in all, they tried to make it easier, but at the end of the day, it's still not a cakewalk, is what I'm saying. There's just a lot of things that you need to stay on top of, and it's changing as we go. So before I forget, I would always say recommend you go back to the SBA loan, SBA site and the Treasury site for more direct information, timely, as well as we use the AICPA site. So use your accountant or your tax relationships as well as your banking relationships. So Jeff, next slide, please. So the biggest that probably everyone's already, the biggest change to the loan forgiveness requirements is the amount of the loan proceeds being used for payroll. Up till now it was 75%. They just lowered that to 60%. And so you can have up to 40% of your proceeds being used for all the other items that we'll cover in a second. And you have to use a minimum of 60% towards payroll. They put a cliff in there. So basically saying, if you go below 60, then none of the loan would be forgiven. But just this morning, as Stevens pointed out to me, that was changed for clarification, saying there'll be a reduction in what's forgiven, but it's not a cliff. It's no longer a cliff. So if you go below 60, there'll be reductions to what will be forgiven. And Stephen and I will get into that a little further. The second big change was the extension of the use of funds period from 8 to 24 weeks. So now what they're saying is you can elect, you can still stay with the 8. So if people want to stick with the 8, they're fine, but you can elect up to 24 weeks for loan disbursement, or the sooner of that 24 weeks from loan disbursement date or December 31st. So it can't roll into 2021. And so you can still elect, the borrower still can elect to go with the 8-week period if that's the process that you've been following already. So you don't have to elect the 24 weeks. Jeff. The other is the act pushes back the deadline for rehiring employees from June 30th to December 31st. So while everyone was rushing to try to rehire everyone by June 30th, the new act extends that so that as long as you hire back through December 31st, that those rehires will be calculated in your FTE and in your spreadsheet and the support for your loan forgiveness. The big key and change that's been there is that you must document your efforts in trying to rehire. So a lot of people have been asking, and we've seen a lot of press coverage where a lot of employees don't want to go back if they're making more on unemployment because of the premiums that have been sent out. What they're saying now is as long as you're documenting your efforts to rehire, so in good faith, and you make that effort from the February 15th through the 12/31 timeline, and you document that. So that means whether it's an email conversation or whatever it is, that'll be that will be considered not a reduction in full-time headcount if you try to rehire and they don't want to come back. The next adjustment was the ease of rehiring requirements. So everyone knows the intent was to keep the same number of employees, right? It's called the Paycheck Protection Program for a reason. They want to keep the same. They want you to keep the same number of employees on the payroll that you had prior to this all going down. And so now they're saying is they're easing the requirements to get your FTE back up to the loan application status that you applied, so that there is no reduction in forgiveness. So now you have until the end of the year to rehire those full-time employees to keep up your FTE account. Again, there was only one exception to the rule, and that's if the employer documents in writing the attempt to rehire and the employee rejects the offer. So Jeff, next step. Okay, so again, just summarizing, it still remains unclear how to demonstrate the inability to rehire your similar qualified employees. So there really hasn't been any more, SBA hasn't given any more guidance or direction on this. And so, you still need to, what we're recommending is you make a good faith effort, you demonstrate the ability to try to rehire staff or even new employees. And if you're unsuccessful, then that'll still count towards the loan forgiveness. And again, you're trying to return your FTE headcount back to the status that you used when you applied for the loan. Number 6 is, the good news is that it appears that even with reduced headcount based on those exceptions, if you use 60% of your loan for payroll throughout the remainder of 2020, it should be forgiven. So you still need to go through the process. So we'll get through this, and Stephen will go into it in a lot more detail, but you still have to go through the whole worksheet process flow for forgiveness. And so one of our recommendations is don't wait now, start doing that analysis as soon as you can before the loan is required, a forgiveness application, because it requires you to put down every employee, the last 4 digits of their Social Security and their salary. So there's a lot of work that can be done now in the forgiveness process in the loan application. Next slide, Jeff, please. Really good news, even though for the folks who do have to pay it back, if it ends up being unforgiven, the repayment terms have been extended from the 2-year time frame to 5 years. So the deferral period of the loan principal can be pushed back the date in which the borrower submits its forgiveness application. So that means not only do you have a repayment term of 5 years now, your deferment extends from the time you submit your forgiveness application, right? So you'll still get 6 months, but that clock starts when you submit your forgiveness application versus the previous when it was, your 8 weeks from distribution of the loan. And again, we're giving advice that, if you have to repay it, now it's on a 5-year term, it's a low interest rate. So even if the piece that may not be forgiven, it's a really, really low interest rate. So it's not a bad situation to be in. So there's not a panic. There should be no panic attack. The other big change that came from the new act was now you can apply for the PPP loan and defer your payroll taxes, the employer portion, from March 27th through December 31st. Before it was one or the other. The new act allows you to do both. Again, Treasury guidelines still provide for SBA loan audits, so the audit piece still remains intact. It hasn't gone away. But Jeff, next slide. So the SBA has the right to audit any loan at its discretion, right? And so, everyone's talking about the 2 million threshold. They gave more direction on the ability to audit anything they want. It's at their discretion, so there's no thresholds. And so, again, be prepared, add as much documentation as you can to your loan forgiveness. Your bank partner will help you through the process. The more you provide, the less chance there is of living an audit, but again, it's at their discretion. There is a safe harbor. A lot of folks aren't familiar with the safe harbor clause. So for loans under $2 million and they meet the safe harbor clause for economic uncertainty and full-time headcount, we just want to remind people that make sure you evaluate the safe harbor clause, because if you qualify, then you automatically will have loan forgiveness. At the end of the day, everything we've seen and read is the audits will come down to liquidity. So at the time you applied for your loan, did the business have enough cash reserves or lines of credit that it could have tapped into to stay afloat? So there, we're, again, a lot of folks that we work with haven't done this, but document in a memo document format all the things that you were experiencing during your loan application, so that your need for applying for the PPP loan was documented and it was clear, whether it was losing clients, whether you were losing employees, whether you were losing revenue, whatever it was, document the frame of mind of when you applied for the loan, and that therefore in the forgiveness process they'll see that you qualified for the loan, and then it again will probably help to deter any audits that may come down the pipe. And then, number 12, same thing. The more you document the financial health of the business at the time of the loan application, the more easy the forgiveness process should be. But disclaimer is going to be: talk to your bank partner, talk to your tax and audit accounting partners. The more you get prepared during the forgiveness loan application, the better chance you have of not getting an audit. So Jeff, let's move on from there. So again, I jokingly made this joke with the group here. The SBA loan forgiveness applications like Chicago's weather. If you don't like it, wait 5 minutes because it'll change. The same here with the loan, PPP loan forgiveness. This probably won't be the last changes. Now that they've extended the runway, there's going to be a lot more clarification probably coming down from the SBA and the Treasury. So don't panic. I always say, if you get ready, if you stay ready, there's no need to get ready. So don't wait like you do for your tax returns. The more you can do up front and get your loan application and forgiveness application ready, then you can kind of just tweak the changes as they come down the pipe. So Jeff will go on to the next. So this section, I want to cover the loan forgiveness application for those who haven't taken a look at it. My partner Stephen over here is going to walk through more of the forms. I just want to give you an overview and kind of tips and strategies that we've seen other clients apply, and some of them have been applying for the loan forgiveness already. So we can give you some advice and some tips to make sure you cover while you're doing the application. So Jeff, if you don't mind going to the next slide, that'd be great. And Stephen, anytime if you want to chime in here and add some flavor to what I'm saying, I'd be more than happy to do so.
Yeah, Frank, actually, and this is going to be really important, a really important part as we go through this. I just to help everybody know, I've been trying to respond to some of the questions online. We have a very active group here, and that's wonderful. So some of these things are going to be coming out. And there's been a question about whether or not we could see the answers as we go. I don't know how to do that yet, but we'll work on that regardless kind of afterward. We're going to make sure the slides are available and that you have the best information, links, and help as we go. So I just wanted to insert that, Frank, at this point.
Yeah, and I'll add one thing on the questions. There's a mode that you can upvote certain questions, and we'll take a look at those questions at the end that have got the most upvotes as a way of prioritizing everything. So if somebody's asking a question that you agree with, just give it an upvote, and we'll work from that.
Thanks, Mark.
Great. So there's 4 steps. These are the steps that were provided by the AICPA and forgiveness of the calculation forgiveness. So, this will be updated as we go along, but these 4 general steps help clarify a lot of the issues. The first is, if you look at the application, you'll see that these are also part of the appendix in the worksheets. So my suggestion on going into this is start from the back of the loan forgiveness application going forward. The PPP Schedule A worksheet is where you have to list all the employees and attach more. There's lines for 6 or 8 employees, so you're going to need to attach an Excel spreadsheet. But here's what we're covering. So reiterate, because there's been a lot of questions. You want to track your total eligible costs incurred and paid, but that's changed, right? So you can still elect it's incurred. It doesn't need to be paid, but now it's through the 24-week period, right? And those are payroll costs. So what those cover, for the most part, is salary, wages, and commissions, any leave payments, any kind of standard PTO type of deductions. It covers payments for group healthcare benefits. So any of the employer portion of employer healthcare benefits, retirement benefits, and then state and local tax assessed on the compensation of employees. That the employer, again, these are what the employer is paying. Next slide, Jeff, please. Okay, and everyone knows these, but it's either rent and lease payments and or mortgage payments if you own the building, and it has to that all has had to been in effect prior to February 15th. And then utilities that you pay for your office location, including electricity, gas, water, telephone and internet access, transportation. A lot of people ask about that. That's if, again, our interpretation is if the employer is paying the transportation benefit to their employees. Not many are probably using that right now because we're staying at home, but that's what it means. Our recommendation is always, if you're not sure, don't include it unless you're running short on expenses. Let's take a look at it. But for most of our clients, the 60-40 between rent payments, lease payments, and their general utilities, that makes sense, internet, telephone, water, gas, those kind of cover within the 40% threshold.
Yeah, and Frank, I wanted to circle back on the payroll costs. We did have a question about some ancillary type people costs, like the referral fees maybe paid to a headhunter or somebody like that. And I'd be interested in your thoughts, but my knee-jerk reaction was that if it's not specifically listed in some of the explanations, that it probably won't count for those types of, for the calculation itself. What are your thoughts about headhunter fees?
Again, clear definition. It's like a contractor. A headhunter is a contractor at that stage, so contractors don't qualify. So the headhunter fee, I haven't seen anything that would be included. So my initial reaction would be that wouldn't qualify.
Yeah, and I think the overriding thought on all this is, read the language, read the interpretations from the SBA, from the EICPA, et cetera. And, everybody's asking similar questions. So, sooner or later, everything's going to get addressed. But at this point, I would agree with you. It just doesn't seem like that's something that's going to fall into that either benefits category or, it's a contractor, so it's outside. I think you're right.
Great. Next slide, Jeff. Actually, the next two we need to go to the step 2. So step 2 and 3 is again walking on the application for forgiveness. You're trying to calculate any reductions that would be applicable to the forgiveness, and so you're calculating 2 pieces that would be a reduction based on changes in payroll amounts or headcount. So what you're looking at, the first step is calculating any reduction in payroll that's greater than 25% of the prior quarter. So that's on an individual by individual basis. So you're looking to see if there was any individuals whose salaries decreased more than 25%. So on the sheet, they're going to walk you through the steps. And what they're doing is there's two clear calculations. One's for headcount that is making under 100,000. And then you're doing the FTE analysis and calculation and the salary reduction and wage reduction analysis. And then the second category is for those making above 100,000. And those making above 100,000, we're going to take a calculation and a reduction, and we'll get into that a little more. And so, you're looking at is the annual average salary or hourly wage during the covered period, has it decreased more than 25% from the previous full quarter? So if you do have a reduction in someone's salary more than 25%, then we'll reduce the forgivable amount by that reduction that exceeds 25%, right? So that's something to take a look at, and you can start doing that now. The second piece in the calculation for reduction of forgiveness is you need to calculate any decrease in your full-time employees headcount from the 24-week covered period. So these dates are all moving, but you're really trying to look at how many FTEs you had at the time of application, right? So you're looking at it from February 15th through June 30th, or at the borrower's election, you can pick January 1st to February 29th. And now seasonal businesses are treated differently. And so not to take up too much time, if there are seasonal business questions, Stephen and I are happy to address those separately because there's a lot of special caveats for seasonal businesses as well as self-employed folks. And then again, you're calculating adjustment because the full-time employees' salary wages were restored. Again, now you have the ability, if you restored them, by June 30th or now December 31st, then you, and those are met, then you can ignore the decreases in the loan calculation that we just talked about in steps 3 and 4. And 5 is the last step, which we talked about, right? Making sure your salary, your payroll costs do not go, the use of proceeds does not drop below 60%, right? If you do drop below 60% and you used it for more things, then the reduction of the forgiveness was a reduction. It was not stated as a cliff, but is now just a step down like originally that was set on the 75% threshold. So, Stephen, there's a question that got voted up and I think is relevant is what's the maximum amount forgiveness amount for any individual? Do we now get 24/52 of 100,000 or is it still 15,385?
Yeah, and I haven't seen anything where the forgiveness has changed. And just so you know, that's a very astute question from somebody who knows a lot about this topic. So Chris, if you want to go ahead and put the answer in your question as well, I'd love to see it. But, what I haven't seen anything that increases the amount of forgiveness. It's a very good and natural question because that 24-week period was announced and put in. But the way that I read it, it was a period of time to allow you to cover the hurdle more so than to increase the forgiveness. Now that's just, again, we're learning as we go, but that's how I read it.
Well, and same thing, Stephen. If you look at the application again, until it's updated, right now the application does say that do not, for any individual, do not put in more than 15,385. So as of now, you can't put cash compensation for more than 15,385 for forgiveness for any one employee. So again, unless that's updated and changed, right now all the indications show that it's 15,385.
Yeah, and a lot of people are asking if there will be updated forms and applications, and I would think that it would, but when the first bit of the law came out, it took 10 days, 2 weeks, it took a while for forms and guidance and explanations to come out. We wanted to get in front of you a little bit early to answer some of the questions, but quite frankly, to make sure that you're thinking of all the questions that could be answered later.
Yeah, great. And so I'm going to try working in some questions as I see them, but that relate. But again, just additional considerations. Again, these are questions we keep getting asked. Annualized salaries, the CARES Act and the additional acts exclude from payroll costs anyone over 100K. Compensation for employees who are not residing in the U.S. So if you have employees that are residing outside of the U.S., they cannot be included in payments to independent contractors. The one advice we get is, the payroll companies are constantly also updating their reporting so that they have reports that will help you during the application process, and that should help you during the loan forgiveness. So I would also recommend going out to your payroll provider to see if they have updated, these support schedules for your forgiveness applications. Next slide, Jeff.
And I'll just take this opportunity to highlight something we'll come to as we go through the form a little bit more detailed, which is there's kind of a difference. For example, that $100,000 threshold with regard to employees who make over $100,000 in terms of the forgiveness calculation, you can include up to that $100,000 amount. But in terms of the payroll, the salary reduction piece, they're excluded. But then they're included separately for the FTE calculation. So you really have to follow it step by step and not assume that because something is up here, it's going to be down in the other place at the same time in the same way.
Yeah, and very good point, Stephen. And then again, we keep getting asked this. Some lenders are requiring a separate bank account for the proceeds. Some of our clients want to do it just so that they can keep everything separation of church and state. What we say is, hey, create separate GL accounts for the loan forgiveness, the expenses that you're using, that you're paying with the loan. That way, then it's all tracked. So if it's forgiven, your accountants and your tax providers, when we're filing for taxes next year, or for this year's tax returns next year, they know how all the information that's there. What we do is, if we pay it out of the main account, we'll then we'll do a transaction that will record the payment from the loan proceeds, and then actually support that transaction with the backup, whether it's a payroll report, whether it's an invoice for the lease or mortgage, anything that you can. I would say start saving up all the documents now so that later on when you're applying for forgiveness, it'll go faster. You don't need a separate bank account. It's a choice, but some lenders we have heard are requiring it. Again, the loan forgiveness applications on the Treasury site, along with the PPP loan forgiveness calculator, so they'll walk you through this process. We highly recommend sticking to those services. There's a lot of other companies that have thrown their own tools up there. They're probably not being kept up to date, so we highly discourage using any of those other service providers and sticking with SBA and Treasury. Go ahead, Jeff.
Right on. So thanks, Frank. That was great. So we're going to move over to Stephen here and talk a little bit more about the payroll requirements, and we'll get through that, and then we got a lot of great questions coming up that we'll look for, and keep asking them. We got some interesting stuff coming up. So Stephen, the floor is yours.
Well, good. And as with, they taught us, for those of you maybe at least in this arena, you remember Arthur Anderson back in the day, and they always said, tell them what you're going to tell them, and then tell them what you just told them. And Frank kind of followed that pattern for discussion and explanation of things. So we go down a couple of slides, Jeff. Let's get right into the payroll requirements. And again, this is a little bit of reiteration of what Frank has shared, but it's going to lead us right into the forms. And so, the eligible payroll costs, as we've talked about now, did get changed to 60%. And then I think it's important just to note that this is how Treasury and the IRS, or how legislators and the Treasury and IRS work together, and sometimes, in different roles. And one of the questions that came up earlier was, well, how detailed of an audit or how specific of an audit can we expect? And then the other question related to that was, do we expect Treasury to be overridden on certain things like the disallowance of the deductions of those expenses used to calculate the forgiveness? The Treasury came out and specifically said, if you're using expenses to calculate the forgiveness, those are no longer deductible for tax purposes. But, the benefit is that the loan forgiveness is, even though it's technically book or GAAP income, won't be taxable income. Well, what we're seeing is a lot of legislation trying to move very quickly, and then Treasury and other bodies, including the IRS as part of Treasury, explaining things very quickly, trying to get that information out. And this cliff that was actually the way the language read on the 60% change in the Flexibility Act got clarified just today or late yesterday, that says no, with the scaling, the sliding scale is what we're going to still go with. So we can kind of count on that. So I just suggest to you that you count on what the most and latest authoritative information is at that point in time, and operate accordingly. And by all means, keeping track of your documentation so that if things do change, you can quickly adapt. Let's go down one and get right into some of the forms. There's really 4 areas, and the last one, we're not going to spend any real time on the demographics because it's optional. But in terms of the calculation of loan forgiveness, we've already covered the areas that are included in that. And the first bucket of the 60% is really the payroll associated with Box 1 and W-2 wages and so on. And then certain areas of benefits and insurance and so on. And then the second bucket is, as we talked about, certain utilities, et cetera. There's a question that has come up about, for example, a SaaS company and their hosting services. Could that be considered a utility? That's probably a question I'd like to take offline, because I see the point, and I have a lot of SaaS companies as clients, but is that, a deemed utility, and is there something that the legislators have kind of focused on, saying, no, it's going to be governmental or quasi-governmental utilities only? I don't know that yet, so we'll figure that out. But really where we want to go is these schedules that really talk about the limitation on the and reduction of the calculation of the amount of the forgiveness. So the Schedule A and then the worksheets associated with Schedule A are really important. And these are the things that you could and should be doing right now as part of your documentation. So let's go first to the actual form for the forgiveness calc. And boy, if you can read that, I'd like to talk to you about, being able to look into space or something. But the form itself is like any other form associated with, these types of tax items. There's a lot of boxes, there's a lot of short sentences, and then there's a lot of words on a different document that explain some of the things that you're looking at. And from the Schedule A piece of this, this is where it's going to go through, and it's going to look at the salary reduction that you've experienced during the periods of time that are relevant for your forgiveness period, and the FTE headcounts. But let's take a little closer look at the next slide and look at the Schedule A worksheet. No, one more down, sorry. We got mixed up there a little bit on our slides. This is the loan forgiveness application. This is where I wanted to go. And again, it's still very small, but there's a couple of things I want to point out that are extremely important. You'll notice that this table that has been published shows employee name and employee identification number. That should tip you off that the detail associated with the forgiveness calculation is expected to be very granular down to the individual. And you'll notice that Table 1 really deals with individuals making less than $100,000, and Table 2 deals with individuals, the rest of the individuals that may be making more than $100,000, because as we mentioned, those higher paid individuals can be included in the forgiveness amount, but only up to $100,000. When we're looking at the limitation, they are not included in the salary reduction portion. So as we look at Table 1 here of the Schedule A worksheet, you see the employee's name and their identification number, which happens to be the last 4 digits of their Social Security number. Then you look at their cash compensation, which is going to be on an annualized basis, and you look at the FTE for that individual, whether they're a full-time equivalent at 40 hours or whether there's something less. Now, there has been some discussion, and Frank, I'm going to put you on the spot a little bit in terms of this FTE headcount. I think you've seen something that shows that 30 hours constitutes a full-time equivalent. Is that right? Mute. You're still on mute.
Would like me to stay on mute for a lot longer.
Not this guy.
No, it originally was that debate going on also with Obamacare, but again, in digging in deep into the actual loan forgiveness application, it gives all indication that it's 40 hours is the base for you calculating the loan forgiveness application.
Got it. And the other thing that I found really interesting was that they gave you a little bit of an out in terms of the detail. There is an alternate approach where you can round up, round down. And so somebody, I think under a certain number of hours, you can just count them as a half FTE so that you don't have a bunch of really difficult decimal places here. You just have 1s and 0.5s in this column on the table. And I think that's an option or a choice that you can make based on the instructions that I read. The most important part of this Table 1 is on an individual by individual basis. It asks, has this person had more than a 25% reduction in their salary? And if the answer is yes, you put the number in there, and that becomes an immediate reduction in the amount of the forgiveness. It's not aggregated. It's not looking at your total payroll versus your total pre-payroll versus your total payroll during the period or what was restored. It's looking line by line for individual reductions. And so this is one of the schedules that I think is really important. And Frank mentioned this earlier as we were prepping for some of this. You can start to gather the information for this schedule right now. And yeah, there may be some tweaks and changes, but we know that the program is looking for an individual identification on an employee by employee basis.
Yeah.
So the item below is Table 2, and what that really goes to is the overall FTE headcount, and the reason again why the higher paid individuals are included in there is because your overall FTE headcount includes all those individuals included in the forgiveness calculation. So these are two tables that feed into the overall Schedule A worksheet that that documentation can start helping with right away. Let's go down to on the slide. I think the next thing that I want to do, just in the interest of time here, is there's been a lot of questions about kind of the accounting entries and the tax approach or the tax entries to both the loans themselves, but also the forgiveness and how they interplay with other tax areas. So let's go down to the next slide and start through some of the accounting and the tax topics. So just to kind of introduce the topic, I think it's important to note that in the beginning, these are all loans. So your typical accounting for any other loan is what's going to apply. And you want to apply as good GAAP principles to this. You want to record the principal, you want to accrue the interest, and you want to go through and record this as a debt, knowing full well that part of the debt may be forgiven later on. But until it is, as my dad used to tell me, until it is, it's not. It's important to account for things in their proper order at their proper time. I'm going to introduce a topic here that some of you may be familiar with, others don't. Don't worry too much about the technicalities of it, but on a corporate tax return, one of the laws that came in, not too many years ago was the idea of limiting the deductibility of certain business interest. And that limitation is, there's several components to it, but the one I'm going to focus on has to do with limiting it to 30% of what they call adjusted taxable income. Now, the reason why I picked that is because it has this very interesting interplay with the loan forgiveness as well as with the actual law itself, because the CARES Act took that 30% limitation and increased it to that you could deduct 50% of your adjusted taxable income as an interest deduction. So it relaxed the limitation. But you're going to see an interesting interplay here as we go through the example, to where part of what's happening with the accounting and the tax aspects of the stimulus package sort of bump into other normal tax areas, and you have to recognize and stay tracking with the ordering rules that are part of every tax return. So let's go down to the example. So in this example, we have a company that got the $10,000 advance that has an approved PPP loan of $100,000, which means that they only get $90,000 because the advance on the EIDL is taken off the top. And the people costs during their measurement period, and you'll notice I specifically chose not to say if it was a 24-week or 8-week measurement period, is $55,000. Other allowable expenses are $30,000, with a $15,000 of that being interest, business interest, that would be normally subject to this interest limitation that I mentioned just a few minutes ago. Book income is $40,000. There's no other book to tax differences, just so we can make the example clean and easy to understand. And by the way, this is not a small business, so we're going to say that the 163J interest limitation would have applied. Okay, so those are just the parameters. Now let's go down and walk through what you would do if this set of fact pattern for this type of business. So we're going to start with the accounting side and then work our way over to the tax side. So these things kind of run a little bit sequentially, but you'll see again the interaction between them. First thing you do when you get your $90,000 loan is you record a debit to cash, credit to a loan payable. Frank made a very important part that you want this loan payable to be visible, whether it's in a separate GL account or whether it's somehow marked within data tags or whatever you do in your own accounting system, it has to be visible. The cash from the EIDL advance, that's already been forgiven. That was kind of the precursor to the whole thing. So that's going to go straight into some other ordinary income. Now, you could put it below the line as an extraordinary income. You could put it, in other income, et cetera. Talk to your CPA and your accountant about where it most be appropriately lodged. But what I will tell you is that $10,000 is taxable income. There's been no comment about that not being taxable income. And so that's part of what needs to be taken into effect. And then finally, you'll want to start accruing interest on the $90,000 loan right away. And so you'll want to make those entries on a monthly basis as that interest accrues. Yes, again, I know that some of it would be, potentially forgiven, but you don't know that till it's done, and a good, GAAP accountant will tell you, record what's real. So then later on, the PPP loan of $85,000, because I showed you the numbers up above, gets forgiven. That will go into book income in some form or fashion. Again, geography in terms of where it goes on your P&L statement, that's between you and your CPA, but it does get recorded as income. And at that point, if that amount of it is forgiven, then you would back out the portion of interest that you had already accrued that's associated with the amount that's forgiven. Okay? So from an accounting perspective, hopefully that clarifies some of those accounting things. On the tax side, very quickly here, what we have is book income of $40,000. In the normal course, because of the way the math works on the interest limitation, you would have had an add back to taxable income of $3,000. And so your taxable income would be $43,000. With regard to after you book your entries for the loan forgiveness income and you remove the deductions for the amounts that went into that loan forgiveness, you're going to have book income now of $135,000, which what that's made up of is the $40,000 of book income, the $85,000 of PPP loan forgiveness, and the $10,000 advance. But then what you have for loan forgiveness, say, oh, I'm going to do a tax adjustment because that loan forgiveness is not taxable. Great. Pull out the $85,000. But then guess what? You lose the deduction, so you put it right back. And that's the piece that has been obscured in all this discussion to a lot of us. We've been talking about the loan forgiveness as not taxable income. That's wonderful. But the point that we raised earlier with regard to Treasury putting out guidance saying, oh, yeah, you're right, that's not taxable. That was in the legislation. But here's what we're going to say. We're going to say that the deductions that built that up are no longer deductions. So you end up right back where you started at $135,000 of taxable income. So I'm going to pause there. And I know Frank and Mark, you've been monitoring some of the questions. What are the highest priority questions that maybe we can answer in our last couple of minutes?
Well, I think one of them was just about that. They was asking about the proper accounting entry in order to effectively forgive the loan. The question is an entry to extraordinary gain on the income statement? Sounds like you answered that one.
Yeah, I feel like it is. Frank, do you have a separate thought? You're on mute, by the way.
Oh, it's exactly that. I think what we're telling everyone is to do the calculation. Most people are forgetting to calculate the accrued interest payable. And so once the forgiveness is confirmed by the bank, then we would say you would reverse those entries and make them non-taxable items on the income statement. And so we're recommending that you clearly identify those so that when you hand us off to the tax provider, they know exactly that you paid with the PPP loan proceeds, as well as anything that was forgiven. So I just keep recommending everyone track all the expenses that they're thinking they're applying towards the loan forgiveness to a loan forgiveness or expense, PPP expense tracker, whatever you want to call it. And then later on, if it isn't forgiven, then we can reclassify it to the proper category. But we're seeing a lot of people book payroll as normal. And if it's going to be applied towards payroll expense is going to be applied to the PPP loan forgiveness and it's forgiven, then you have to carve that out of your payroll expense for your tax filings later. So we're telling everyone, recommending everyone keep a close track of all these transactions that relate to PPP loan forgiveness, because you don't know if it's going to happen or not. So you got to track it. So then if it is, then we know which direction to go.
Right.
No, that's great. And I was going to switch gears a little bit from the accounting, because this one came up and a few people have raised their hand around it. It also came up in questions before the webinar. But how detailed will the audit be around the area of need for the loan, and how can you fully prove need? Would you guys address that one?
Well, I'll start with the easier part and then punt the hard stuff to Frank. But, but with regard to any tax audit, and this is going to feel like a tax audit, even though it's not really, you have to start with something that really is sustainable in the context of source data. So when you're putting numbers on a form and representing a calculation, whether it's for the FTE reduction or for the salary reduction or anything else, you're going to be listing out, for example, your employees' names and the last four of their social security number. It would be wise for you to grab your payroll reports that show the full thing, and that would be treated as a source document, not something that you created, but something that substantiated other filings with the government. And that's the package of what we would call audit support on the numbers themselves. Now, with regard to the need for the original application, that's the harder part, and that's the part that I'll punt to you, Frank. You mentioned up above about the need kind of being to do with cash flow and liquidity and things like that.
Yeah, I'll again, I'm not a lawyer. I'm just playing one on TV right now. The reality is, the lawyers that we've talked to, and actually these same lawyers got a couple of our clients to not take the PPP loan, is that it basically needs to document the management's frame of mind at the time of the application, showing that whether you're having clients that canceled, right? Things that were entered into your frame of mind to show that that there wasn't enough capital or liquidity to manage your cash operations, and that at some point you'd be in cash trap situation. And so the lawyers are telling all of our clients to document at the time anything you have, emails from clients that were canceling, lost contracts, things that were put on pause, clients that were, we had a bunch of clients that were like, hey, we want to pause for a second and get started again in a bit. Those are clients of clients. So any of that stuff that you can document, and again, back to Stephen's point, that is auditable and third party substantiated. So an email from a client, if not document conversation, anything that shows that, everyone's terrified at the beginning of this, not knowing how this is all going to impact their business. So it doesn't mean that now has to be at the forgiveness situation. Things might not have been as bad as you thought they were going to be, but that's why we say go back and document and date it as the time of the loan, what was going on in your loan and why you thought you needed the loan.
Fantastic. We got a couple more minutes here. I'm going to ask one more question that came up that a few people wanted to know. Are severance payments subject to the 100K annualized cap, and is that prorated over 8 or 24-week period?
So my understanding with that, and again, we'll clarify that afterward. But my understanding is that the 100K limitation from a forgiveness standpoint is related to box 1 wages, and so severance pay is reported a little bit differently, and it is something that is separate. It's not going to be annualized in the same way that a person's salary is, but it is listed out as one of those benefits that can be part of the forgiveness calculation, and so I think you get to include it. But my initial reaction is that severance is not, part of the $100,000 limitation. Frank, do you agree with that, or?
Well, I'm looking at the slide we did on the ASCPA. The ASCPA has listed as included compensation to employees and allowance for separation or dismissal. Yeah. So as of this morning, the ASCPA's assessment was, yes, you can include any allowances for separation and dismissal.
Good deal. All right. Well, we're running up on the end of our time, so we're going to cut it there. But I'll tell you what, this has been great. Thank you both, gentlemen. I think one of the things that you learn from listening to this is, again, we're in a environment that's changing a little bit as things go, as legislation changes, as guidance changes, and it's really important that you talk to and listen to your advisors in your business, whether it be your banker, your accountant, your tax guy, your payroll folks, your attorneys. Draw on those resources as we're seeing a whole bunch of stuff, and you guys tend to be just looking at your one business. So, yeah. Frank and Stephen, any quick last words?
Yeah, just one quick thing. We are going to send the slides out. Just again, all the caveats about things changing, blah, blah, blah. But our contact information is in there as well. And I know both Frank and I and Mark, for that matter, we're happy to jump in and help with what we know today and just further the cause. This is a time when we're all pulling together. So Frank, go ahead.
No, I was going to say the same thing. And I think what we'll do is also distribute all the questions to the group that was in attendance and the answers, so that if anyone couldn't see the responses, if we didn't vote it up, then you probably couldn't see the response. So we'll just do a cut and paste and distribute that to the
All right. Great idea. All right. Well, thank you both, gentlemen, and thank you everybody who's still on the line for attending, and have a great day. Thanks.
Thanks so much.
Thanks, Stephen. Have a good day.
Thanks.